Crypto is the future of finance, and the future is now. The path to it will be through crypto exchange-traded funds, ETFs, especially when the world's largest asset manager, BlackRock, is also joining the game. Remember the days when people scoffed at the idea of investing in cryptocurrencies? They called it risky, volatile, and a surefire way to lose your hard-earned money. And you know what? They might have had a point. The crypto market has been known to be a wild roller coaster ride, with prices soaring to incredible heights one day and then plummeting the next. But what if I told you there's a way to make crypto investments safer, to eliminate the need for daily chart watching and sleepless nights filled with anxiety? In this video, I'll show you why crypto investing has problems, but also how the new crypto ETF models have made them a safer bet. In the end, I'll show you possibly the best 5 crypto ETFs, BlackRock's newly released iShares Bitcoin Trust, and we'll run the numbers on what you could expect with these crypto ETFs by the end of the year. Cryptocurrency, often known simply as crypto, is a type of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by governments like the US dollar or the euro, cryptocurrencies operate on decentralized networks based on blockchain technology, a distributed ledger that records all transactions across a network of computers. Think of blockchain as a chain of digital blocks. Each block has information about transactions, like a digital ledger in a library that keeps a record of who borrowed which books. Every time a crypto coin is bought, sold, or traded, a new block is added to this chain, making it a secure way to track who owns what. Crypto has become really popular because it's new when compared to traditional currency, and it has a very versatile technology behind it. People talk about how its value can go up quickly, making it seem like a magic way to get rich. This excitement makes more people want to buy crypto, hoping its value will increase tremendously. Decentralized systems like cryptocurrencies offer a range of advantages. They promote financial inclusion, enabling access to financial services for the unbanked. Transactions are highly secure and transparent, thanks to blockchain technology. Users retain full ownership and control over their assets, reducing reliance on intermediaries. Cross-border transactions become more affordable due to lower fees, and they can occur with 24/7 accessibility and faster settlement times. But investing in crypto can be tricky. It's like riding a roller coaster. Sometimes the value goes way up, and other times it drops really low. This makes it risky, like guessing which way a coin will land when you flip it. Also, since it's all online, there are risks like hackers. Plus, it's pretty new and complicated, so sometimes people don't fully understand what they're investing in. Now this is where crypto ETFs come into play, acting like a bridge to this world. Crypto ETFs are special baskets that hold different kinds of crypto-related items. Instead of buying cryptocurrencies directly, which can be tricky, you buy a share of this basket. This basket, or ETF, is traded on regular stock markets, just like you would buy or sell shares of companies. From there, the management team takes the control of where to invest, when to invest, and when to cash out. There are 2 main types of crypto ETFs. One type holds actual cryptocurrencies, known as spot ETFs. The other type doesn't hold the coins themselves, but uses futures contracts. These are like promises to buy or sell the coins at a future date and price, similar to making a deal to buy or sell your favorite toy in the future at today's price. When the value of the cryptocurrencies in the ETF's basket goes up, the value of your share in the ETF goes up as well. So if you own part of this basket and the prices of the cryptocurrencies that it holds increase, you make money. This is how investors earn from crypto ETFs. Now, the new crypto ETF does come with its own pros and cons. Crypto ETFs act as a safety net for the world of cryptocurrency investing. They reduce the risks associated with direct ownership. You don't have to worry about the complex process of buying, storing, and securing digital currencies, so positively, they're more accessible. However, there are downsides to consider. Crypto ETFs can be more expensive than other types of ETFs, and they might not match the price movements of the cryptocurrencies exactly, especially those that use futures. Also, owning a share in a crypto ETF means you don't actually own the cryptocurrencies, you own a part of the ETF. Still, it goes without saying that crypto ETFs could potentially be a significant development in the financial world. They offer an easier and safer way for people to become part of the crypto world. With these ETFs, investors can benefit from the growth of cryptocurrencies without facing the full brunt of their volatility and security concerns. For example, if a crypto ETF has an annual return of 35% and you invest $10,000, your investment could grow to $13,500 in a year, minus any fees. That's assuming a 10% change in price. Now I'll show you 5 such crypto or crypto-focused ETFs that have over 40%, 60%, and in some cases over 90% returns over the last few years. In the end, I'll also show you the newly licensed crypto ETF from the world's largest asset manager, BlackRock. Starting at number 5, we have Fidelity Crypto Industry and Digital Payments ETF with a 44.9% return. Known by the ticker symbol FDIG, this crypto ETF is a relatively new fund in the world of cryptocurrency-focused ETFs, having been launched in April 2022. This ETF aims to mirror the performance of the Fidelity Crypto Industry and Digital Payments Index, which is made up of companies involved in the cryptocurrency, blockchain technology, and digital payment processing sectors. Over the past year, FDIG has experienced a significant change in its ETF price, with a one-year return of about plus 44.9%. This means a $10,000 investment over last year would have earned around $4,490. As of now, FDIG has assets under management worth approximately $69 million and an expense ratio of 0.39%. They limit each stock's weight to 22.5% or $20 million in daily trading volume. The fund adjusts its holdings every 3 months and has around 45 stocks. The top 10 stocks make up nearly 60% of the fund's assets, with Coinbase, Marathon Digital Holdings, and Riot Platforms being the largest. Next up at number 4, we have ProShares Bitcoin Strategy ETF with the ticker symbol BITW and with a 47.87% return. With an expense ratio of 0.95%, it sits on the higher end of cost for ETFs in this category. But it all makes sense when you look at its assets under management, worth about $1.85 billion, reflecting its massive size and investor interest. Over the past year, this crypto ETF has seen its ETF price change significantly. The ETF has experienced a growth of approximately 47.87%, which is a $4,787 return on a $10,000 investment in just 1 year. This showcases the volatile and dynamic nature of investments tied to Bitcoin futures. BITW's investment strategy is primarily focused on Bitcoin futures. This approach means that instead of investing directly in Bitcoin, the ETF aims to track the performance of Bitcoin through futures contracts. This method provides investors with exposure to Bitcoin's price movements without the need to directly purchase and hold the cryptocurrency. This strategy is a common way for traditional investors to gain exposure to the cryptocurrency market while staying within a regulated framework. At number 3, we have Global X Blockchain and Bitcoin Strategy ETF with a 64.06% return. Known by its ticker symbol BITS, this is a unique investment choice that focuses on the evolving world of blockchain and Bitcoin. As of recent data, this ETF has an expense ratio of 0.65%, and its assets under management are valued at approximately $20 million. Over the past year, BITS has experienced significant changes in its ETF price. the ETF's value has increased by about 64.06%, which would translate to around $6,406 in gains from $10,000 over the years. If you think that's a solid return, wait until you see the last ETF on our list, which has returned over 90% over the last year. BITS uses a strategic approach to investing, primarily focusing on blockchain companies and Bitcoin futures. This strategy aims to leverage the growth potential inherent in the blockchain technology sector and the evolving market of Bitcoin as a digital asset. By investing in a mix of equity securities of blockchain companies and Bitcoin futures contracts, BITS offers investors exposure to both the technology underpinning cryptocurrencies and the cryptocurrencies themselves. At number 2, we have Eck Bitcoin Strategy ETF, or XBTF by its ticker symbol, with a 74.85% return. This crypto ETF mainly focuses on investing in Bitcoin futures. It carries an expense ratio of 0.76% and has assets under management amounting to about $53 million. This ETF is designed to offer investors exposure to the price movements of Bitcoin without directly investing in the cryptocurrency itself. In terms of performance, XBTF has experienced significant changes in its price over the last year. As of January 2024, the ETF showed a one-year change of 74.85%. In terms of dollars, that's a $7,485 return on a $10,000 investment. This reflects the highly volatile nature of the cryptocurrency market, particularly when it comes to Bitcoin futures. It's important to note that such investments can see wide fluctuations in value, underscoring the inherent risks and potential rewards of investing in crypto-related financial products. XBTF's investment strategy primarily revolves around Bitcoin futures contracts. Rather than holding Bitcoin directly, the fund seeks to achieve capital appreciation through managed exposure to these futures. This method is commonly employed by investors who wish to gain exposure to the cryptocurrency market while reducing some of the risks associated with directly owning digital assets. And finally, at number 1, we have Bitwise 10 Crypto Index Fund with the ticker symbol BITW with a 94.21% return. This may be number 1, but we still have one more brand new crypto ETF released by none other than BlackRock themselves coming up at the end of the video. Back to BITW. Launched in November 2017, this fund is designed to track the performance of the Bitwise 10 Large Cap Crypto Index, which represents the 10 largest investable cryptocurrencies. These top 10 cryptocurrencies make up about 70% of the entire crypto market value. BITW's portfolio is heavily weighted towards Bitcoin, which makes up roughly 68% of the fund, followed by Ethereum at 22% and XRP at 2.9%. Other cryptocurrencies like Solana, Cardano, and Chainlink are also included, but with smaller weightings. As for its size, BITW manages assets worth approximately $700 million, making it a substantial fund in the crypto space. The expense ratio of the fund is quite high, at 2.5%. This fee includes management, custody charges, and other customary fees. But the return it has given over the last year makes it totally worth it. Speaking of which, this ETF has seen significant change over the past year. As of January 2024, it has experienced a one-year change of about 94.21%. In other words, if you had invested $10,000 in this crypto ETF, it would have almost doubled your investment. Or, to be more precise, provided earnings of $9,421 on an investment of $10,000. These ETFs may not be the most sound long-term investments. They could be good for short-term gains. They're not as safe as stocks, but then again, stocks also don't typically offer a 90% return in a year. Just like we said at the start, investing in crypto has its own pros and cons, and your risk tolerance should determine your choice. Now, as promised, up next, we have the newly released iShares Bitcoin Trust, managed by the world's largest asset manager, BlackRock. This new crypto ETF has recently made headlines for its rapid growth in assets under management. Within just 1 week of its launch, IBIT successfully crossed the $1 billion threshold in inflows, making a significant achievement in the ETF market. This accomplishment reflects a strong investor demand and interest in the product. IBIT primarily holds Bitcoin, making up about 99% of its holdings, with a smaller portion in fiat currency. This composition underlines the fund's focus on providing direct exposure to Bitcoin for its investors. The ETF started trading on the Nasdaq, offering a convenient and cost-effective way for a wide range of investors, from asset managers to financial advisors, to gain exposure to Bitcoin. What makes iShares Bitcoin Trust special is its backing by BlackRock, the world's largest asset manager. This association offers a level of credibility and may attract institutional investors who are generally more cautious about entering the cryptocurrency market. And that's one of the reasons why this ETF had a rapid accumulation of assets, especially considering the fund's recent launch. It underscores the growing investor interest in Bitcoin and the broader cryptocurrency market. So, you like ETFs, but maybe crypto isn't your cup of tea. Here's a video covering the 6 buy and hold forever dividend ETFs to help you make informed decisions.